Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right. So Target underperforming in this space. Walmart had some good earnings. What kind of data do you guys have on Target going into this report? Because it seems like the bar is relatively low compared to maybe some of its competitors.
I know you see what Walmart did, the reaction that they had, very strong earnings report, and you would thought that Target would run up more than it has today. It's kind of just moving with the market a little bit, right? But, Walmart reported that there's more discretionary purchases happening. Holiday shopping's already started. I think that maybe there's some concern that consumers are trading down from Target to Walmart, and that's why Walmart did well. I'm not taking that stance. I think that this is a rising tide kind of situation, and both boats are going to be lifted. The data that we've got shows that Target is maybe not doing as well with Walmart when it comes to the hardcore consumer demand data, but happiness is picking back up, and that we're seeing some snap reversals of some downtrends when it comes to their digital data. So, when we look back at what Target talked about last quarter, I mean, they raised their forecast. They said that their brick and mortar was doing well, digital's doing well. We know that their consumers are very happy with the same day delivery. Their loyalty on their rewards program is very strong, and that kind of matches with what we've got, and we've actually seen a lot of that continuing. So when I talk about a little bit of a snap on the reversal, so their digital numbers, websites and app visits were kind of downtrending for a while. In fact, if you look back to about 3 months ago, it was negative 11% year over year, but now we're actually moving to positive 3%. We're looking at apps here. This is positive 7%, and you can see there was a little bit of a downtrend over time, but we've got a pretty sharp snap on that side to that. Now we're positive 7% on a year-over-year basis. And again, this is year-over-year, so we're comparing apples to apples. Even though we're moving into that holiday shopping season, we're doing better than we were, and for a long time, we couldn't say that. A very similar story when it comes to web visits. It was negative 11, now it's positive 3. So that's a 14-point move in just a few months. Now they aren't doing as well as Walmart. Walmart is doing better, as you can see here. I mean, Amazon is, Target is +3, Walmart's +8. So we knew that Walmart was going to come in with better numbers than Target, but a lot of the stuff that we're looking at, this is just consumer demand. When we look at happiness, Target has had a big increase in happiness, and a lot of it has to do with that the loyalty program, that $99 a year. You get same-day delivery, you get free shipping, and you get other perks, including delivery from Shipt. For all that stuff goes with Shipt because they own it, and then you can combine that with other retailers that work with Shipt, like Sephora, CVS, Publix. So it's kind of a nice benefit for users, and they're actually talking about, some of the things that we see online. People are talking about how when you order with Target on Shipt, you get it in 1 to 2 hours no matter what, whereas with Walmart, you'll get it the same day, but it's hours away, right? Maybe 4, 5, 6 hours. So, I mean, it just shows how greedy we're getting at this point. I can remember when we had 2-day delivery on Amazon years ago, and that was unbelievable. Now you want it in an hour, and if you don't get it, you're switching services. But, it's really incredible what these companies are able to do. And everything that we're seeing is basically telling us that, yes, Walmart had a great quarter. We kind of knew that they would, but we don't think it's an anomaly. We think that Target is moving along that same trajectory, and they're actually reversing some of the negative trends that they had. So now it's just a question of how do you play it, right? I mean, last quarter they jumped from 144 up to 159 on the stock on our very good earnings report, and they ended at 159 at the end of that day, and we're basically 158 now. So they've been kind of sideways, up and down. We're at the sort of the higher end of the channel, I guess. But I still think there's room for upside. I liked it a lot better yesterday at the open at 153 than I do at 158 now. But given all that we know, I'm bullish going into this report.
Landon, when I saw the Walmart news release, I thought the same thing you did. Because of the focus on discretion, remember, it was a couple of years ago, the genesis of all Target's problems was the big miss in discretionary inventory and how they had to lower margins to get rid of that inventory. I think if there's any real recovery, and remember, Target is a fraction of the size of Walmart. 8 billion outstanding shares versus 460 million. This is a small company compared to Walmart, and it's got a much lower PE and a much higher dividend yield than Walmart. So, I mean, there's a lot of positives here if they can find their niche. Now, the risk, in my opinion, is that Walmart's eating their lunch and they're taking their customer share. But your data does not show that, and that's, I think, promising for a company like Target if they can just find their place in the middle of this big box retail.
Right, I agree with you completely. Now, the thing about these two companies is for a long time, Target was always seen as the kind of the higher class version of Walmart, much smaller, but much nicer stores. Consumer happiness scores were always coming in higher. And over the last 18 months or so, we saw that gap close. And I think there was even a few quarters where Walmart happiness was higher. Target got into some political stuff, and, you get polarizing voices there. But I think that kind of reversal really worried investors, because if Target doesn't have that, then what do they have, right? They don't have the size to compete or the pricing power. So if they don't have the conception that they are the higher class version, then I think that's very concerning. And Walmart, to its credit, has done a lot to up its game as far as perception of quality, the niceness of their stores. So that, I think, was a big concern for investors, and I think it was a legitimate concern. Now we're starting to see Target move in the right direction, competing on happiness again, competing on consumer perception, and they're getting back to where they were. I think they had a little bump in the road there, but now they're on the right track. So if they are valued lower, and if they do have all this upside, if they're perceived as the better company as far as consumer experience, then they have a lot of upside competing against the giant. And I think you just got to look into this. If it's discretionary that really moved the needle, just like you said, and that's where Target's going to pick it up. It would be really surprising to me if discretionary money went into Walmart and it didn't also go into Target. So I'm a little surprised it's not more up today, the stock, but I think that's an opportunity for investors.
It was actually down. In the morning. It's traded 154.
Right. And Len, I know you guys are bullish on this one going in the report. Stock up now 11% so far this year. But, if you look at retail sales, back to school was during this quarter. Circle Days was mixed in there also. So that should probably also give them a boost, right?
Yeah, absolutely. And I mean, Walmart talked about how people are already starting holiday shopping, back to school shopping is going to be in here. So, you've got the reported quarter with back to school, you got the forecasted quarter with holiday shopping. So, overall, the data that we're seeing is that people are moving back to Target, whereas the last, again, 12 to 18 months, they had a perception problem and they were really starting to trail off. It wasn't significant, but it was a downtrend for sure. And this quarter, it looks like a snap on that to the right side, to the upside, which is where you want to go as an investor. So, I don't think it's going to be a giant surprise, but I do think that there's opportunity for the upside because people are kind of pushing them to the side saying, I think that was just Walmart that had a great quarter. I don't know about Target. And I'm saying, no, I think they're both having a great quarter. So I do think there's upside here. And, for those interested in the score from -100 to +100, our score on this one's +56. So we're more confident than a lot of our trades. This one we like.
Yeah, bullish on Target going into earnings. That's a high score, 56.
Data doesn't lie, people do, Tom.
That's true. All right, great stuff. Great data as always, Landon. Have a good day.
Thanks, guys.
All right, that's Landon Swan, co-founder at LikeFolio, breaking it down for us. Option market